This is Justin Pulitzer. This is my weekend review video for Sunday, March 5th, 2017. Decent amount of stuff to cover. I'm going to go over a couple of macro things, get into the 7 market keys, which I'm starting to expand, maybe 7.5. Talk about the major market indices, and then hit up some of the momentum stocks that we've either come to know and love or loathe and hate, or hate and whatever, something. So let's start out. So we're quickly approaching to a potential debt ceiling issue around March 15th, 16th, so that's a bit of a wild card I just want to keep out there. Don't necessarily know if the market's going to get into full-on freak-out mode, but something to be noted. We also have a big employment number coming up this Friday that I think will kind of shade the Fed a bit more. Yellen was pretty specific, which is rare moments of candor for any Fed governor. But they basically have now decided that they've met their employment mandate. They didn't mention the inflation one, although they have hinted that they don't necessarily think they've met their inflation mandate, but they now have met their employment mandate. As far as I'm concerned, my take is a little bit different. I've lived in New York City my entire life. I've spent a lot of time walking around the streets, riding the subway, driving around, and I'll just tell you, you can feel that the economy isn't doing so well. I've never seen more beggars in the subway. I've never seen more homeless people by highway underpasses or overpasses or what have you. And I just know from speaking to people that the employment situation isn't that great. But, I'll tell you, I always see these Fed governors interviewed, and honestly, I would love to be one of the people that interview them. And some of my questions would just be like, do you know what the price of a gallon of milk is? Or do you know, or a quart of milk, or what have you? Or, how much is a gallon of gasoline? Or, how much is it to go to the movies? Or what's the average price of an entree on a menu? And I'd love to see just how out of touch these people truly are. Anyway, that being said, they will have a meeting coming up in the next few weeks, and the market seems to be pricing in a very high probability of a rate hike. Economic data came out this week. We had a heck of a lot of stuff. We've had back-to-back Philly Fed numbers that were barn burners. We had a ISM manufacturing number that was a beat. Said that the exports were good. It actually was the highest one since August of 2014. We did have a PMI manufacturing, though, that was a bit of a miss, and there was a little bit of a hint of some cost inflation, some export order issues, but they did say that the energy sector was improving. We had a PMI service, which was a bit of a miss, but the internals weren't all so terrible. It has been the lowest reading, though, in 5 months, so a little bit mixed there. And then we had an ISM services were a beat. By the way, within that PMI, which was the miss, 17 out of 18 sectors seem to be improving in the business cycle. So things aren't necessarily bad. I'll tell you this much: I've heard a lot of talk about when the market is going to top, when is the run going to be over, and I hear all this stuff about 7-year cycles, or we're past 7-year cycles, and bull markets don't die of old age, they die on recessions. And the good news for the economy is that things are improving. Growth is accelerating. You have Trump in office. He is going to be cutting taxes, repatriating money, repealing and replacing Obamacare. Deregulation is going to be huge. These are all growth positive plans. I don't know what the speed is of implementation or what have you, but it seems like things are moving along in the right direction. He's been negotiating to add jobs, and it seems like a lot of money is going to be flooding into the United States for purposes of growing business. The Fed has been the only game in town, and everyone thinks that because the Fed is going to raise interest rates, that the cycle is going to end. You know, the rates have been artificially low for a long time because we've just come off of an 8-year administration that had demonized business and demonized growth and basically rewarded dependency and entitlements. This is a big problem, and the Fed has gone on record saying that they were looking for more fiscal policy, and I think really just the Fed thinks that now they might not necessarily have to be the only game in town. If you think about an airplane flying, they were basically flying on one engine, and that was the Fed. It's a powerful engine, mind you, but maybe now that the growth is back, that they don't necessarily need to be at the zero bound for forever. Anyway, that being said, let's jump right into it. VIX, low for a long time, like I've talked about. We've gone through these periods here of low VIX. There tends to usually be a spike, followed by more low, before an expansion potentially of range. Let's zoom in. I want to show you something that's a little bit notable. Remember in last week's video, I had said that we were starting to see higher lows in the VIX and kind of equal, maybe higher highs. We've now broken that trend. This was the potential new uptrend. We've had these potential new uptrends several times. Let me zoom out a little bit. I'll show you. We had this potential one here, which snapped and kind of just hung out for a while. There was this spike, but resumed to be low. We had this one here, which had spikes and then broke. And I'm expecting there to be some type of a volatility spike soon. I don't know when that's going to be, but we did now break trend here quite dramatically. And these were 2 days when the market was trying to sell off, and the VIX just couldn't get out of its own way and basically closed on the lows. So that being said, we are in purely directional options mode. Let's go back to my key. Oops. Low pure directional options play. So that means buying put spreads, buying calls, selling call spreads. Yeah, so that's the scoop with the VIX. So the biggest threat, and I've said this for a while, it's sort of a double-edged sword, the strong dollar, is that the dollar, other S&P companies do business overseas, and they have to repatriate money, and businesses like Caterpillar and so on and so forth have to do business overseas, and when the dollar's strong, it makes their items less competitive with current companies that, like Komatsu or Chinese or Japanese companies that are dealing with currency manipulating governments that make their products more attractive. I don't want to get too into that, but strong dollar would be a problem. That being said, I had said that we were in a potential head and shoulders setup here. This was starting to look a little threatening these last couple days, but Friday was down pretty solidly, and this to me looks like the head and shoulders could potentially still be in play. Below 102s is vulnerable. Above 102s gets to be a little more problematic. And if there's anything that clears 103.81.5, I think we're heading to 109s basically. That's my measured move forecast. So I think you could, if you want to be short, just 102.27 is your stop. Anything above there is strong, like bull. UUP. Also, very similar type of situation here. This was starting to threaten. You now kind of have a bit of an islandy reversal, and we stopped right on the 50 and the 10-day. So 50 was a lot of resistance. It now should be support. If it gives way, it could give way in a dramatic fashion. So keep an eye on that 50 MA in the UUP. Let's get into some of the commodities, shall we? Silver. So this has been a commodity I've been bullish in. Played it well, but looks like we're having a bit of a pullback here. So what does this mean? So the 200 MA was support. It broke down, consolidated above it, or under it. Trouble getting over it. Broke trend, now back below a bit. So I had mentioned I was a little tentative with this because of the kind of wuss nature of the breakout, but it did sustain for a number of days, and now it's below. 200 should have caught it. I think this just got overdone short term, and it bounced and stopped right at the 200. So I'll put it like this. If you lose these 2-day lows, it's probably a quick short down to the 50% fib. Somewhere between the 50% fib and the 100 MA and the 50 MA confluence. You could see where this gapped up, where the pattern really started going, was above the 100 MA. So a pullback to the 100 MA now should be some support. And look where this breakdown really took place from. This is the first time it was above the 100 MA, and now that should support. So if we get above Friday's high and the 200, you could play long with an add above 1740, which is the high of day of this breakdown bar. That would be, to me, a false breakdown. If you're more conservative, you could just buy stop it up over 1740. If you're looking for a quick short, below the 2-day low here should bring it down into the 16s, where I would be an interested buyer again. I'd probably be looking to sell puts at or below the 61.8% fib level. Gold. I've been more of a silver guy than a gold guy, but let's do it. So we've had a bit of a triangle forming here. Let me get rid of this for the moment. Not really that important, although it is primary trend. We had this wedge forming. It seems to be resolving to the downside. So the 200 MA held it. The selling hasn't been all that violent. If you were to get back above the 2 days here, I think it would be okay. If not, I would assume that this would likely see the 50 MA. Let me draw in a Fibonacci retracement here. Because if we are going to get growth, we probably are going to get some inflation. And you have to assume that gold would respond to that. So I don't play 38.2s on dips. I play it on bounces, but that's another conversation. This area, one of these fibs, gold seems to respond really well to 61/8, and that's sort of a volume distribution. So if you want to play some put ratios, you can buy something in here and sell maybe 2 times out of the money down here. Primary trend is lower, but that would be a pretty big give up. It's possible. What I'll probably be doing personally is waiting for it to get down to the 61.8 and then selling some out of the money puts either at 107 or below strikes, because I think it would be very hard to just come down all the way from the top here, break through 107 and just keep going. If there was a break below, I think it would be kind of unless this kind of came down, dribbled around, and then went. But if this is like a straight down move, then I would think that it would be coming down from the top and hard to get through. I'm not as interested in gold as I am in the miners. And someone asked that I review this. I was honestly planning on reviewing it anyway. But anyway, we're here. So we're getting close to that 61.8 here. If the commodity remains soft, the miners are going to remain soft. You can see we're in a down channel. This was sort of a bear rally and a down move. Double topped basically here and now pulling back. This could make it all the way down to the channel low at this point. I don't know if that is going to be the case, but from the entire rally, the 61.8 here is down in the 19s. So what I'll be doing is somewhere between 21s and 19s based on my feel for the stock or whatever, the ETF. I'll be looking to sell out of the money puts somewhere probably around wherever this regression line is at the time, or maybe near the channel low. So I'll update people on that when I start getting involved in the trade. I have nothing going on right now. The 50 MA was where we broke down from. It was a devil of a time to get over, and now it's below it again. So anything below the 50 MA, I don't want to be long unless it's lower. If we get back up above it, I would think that this was just a back off, and we're probably going to bust through. If you want to be really ultra conservative, you can put a buy stop over 25.27. Anything above that should fill the triangle up to 31s. So, I don't know if I'm going to do this 61.8 here, just because it's kind of tried to rally. I think down here, though, I would be down in the 19s. I'd be interested in selling some out of the money puts. So that's probably the way I'm going to play it. And I've been slowly but surely dipping my toe in some of these minors, like just the $2 and $3 ones, as sort of, I don't want to say lottery plays, but betting that they can't all kind of go bankrupt. The bonds. Let's get real for a moment, shall we? I want to show you something. If you go back to a 15-year weekly chart, this was 2009, the crash high. We have spent an inordinate amount of time in this sort of rising channel, and a lot of time above kind of the end of the world party highs. That being said, let me kind of a Fourier mode lately with these charts. That being said, there is a channel low coming up here, and that's in the 15s. So if there was any kind of spike down on like the Fed hike, remember what I said the last time, that the Fed day here would be the low for the move and we'd get a rally. I think that that will be the case again, because the Fed is not likely going to raise again immediately. It's being factored in that they're going to rally, they're going to raise 3 times a year. That's cute. It's possible. I think 2 is probably a done deal. 3, I'm not as convinced about just yet. That being said, the Fed's supposed to be raising rates, right? They've basically told us they want to raise rates, although I don't really believe that. I'm just going by what consensus is. I want to keep this as consensus as possible for the moment. I actually read the Fed minutes, and I've listened to some of the comments from Yellen over in the past, and they've basically said that they were going to allow the economy to run a little hot before getting hot and heavy with raising rates. And they talked about symmetry and inflation, and they haven't even really reached their inflation target yet, so it would behoove me to think that the Fed would want to wait until they reach their inflation target. But that has not been the, that may not be the case. We'll have to see. Anyway, take a look. They've been talking about raising, and we're still having these look below and fails. This one here was actually a look below and close below, but the next day was an outside day that closed higher. We're still basically holding the Fed day highs. So what I would think here is you could use this 2-day range. Anything below there and this range low would be a short for that move down to the 15s. If you can get above this 3-day high, you could see you had these 3 days and these 3 days. If you get above this high, this 1955, I think we're going to get a rally in bonds, and it could be a lot more dramatic than people think, and I think it'll catch a lot of people off guard. HIG. For an economy or a market that's supposed to be going into, you know, a tailspin, if you listen to the pundits, high yield is certainly not showing that. It broke out. It's pulling back to test the breakout. You have a 50 MA right below. The last time this lost the 50, it did have quite a tumble. So I'm going to say that this remains okay as long as it holds the 50. If it loses the 50, we can reevaluate at that moment. Oil. Now, I keep hearing from everyone, including the media, how heavily long the street is of oil. I have a bit of a theory about this, but it's a bit of a conspiracy theory, but if you bear with me for a moment, the Saudis want to bring Aramco public, and they're not going to do that or be able to do that if oil is getting itself, beaten. So I think they're kind of keeping the production lid on, and I think that although I will say that the Canadians and the U.S. are making up for it. But Saudi is Saudi. So I'm thinking that they're going to be able to kind of hold oil higher for longer than people might realize. And you can see we've been kind of tapping on the sky. The more times we get these look into 55s and it back off only a little, once it breaks through, it's going to go. I mean, the thing is just going to take off. And it could be quite dramatic. The real range here is from 49.61 all the way up to 55.24. So, I mean, you could double that range up. I mean, that would be a pretty big move that I don't think a lot of people would see coming. Still above the 50 MA for all the, I think we're above the 50 MA. Let me zoom in. Let's get up close and personal. Yeah, we still close just above the 50 MA on a weekly close. So, not all that terrible. If we were to lose the triangle here, and we were to lose 51s, I think we could pull down to 49s, but I really think this area is just a big consolidation range, and it seems to be trying to consolidate higher. So my thoughts are, is if you want to play oil for momentum, just wait till it clears 55s, and then there should be a lot of room. If you lose these two-day lows, 52, 55-ish basically, it's basically a double bottom, I think that there will be a move down to the 100 MA, down to 50, probably rather 50, 51 rather quickly. So that's a couple of ways I like playing crude. This Exxon is just a choppy mess. We're in a bit of a corrective pattern. We've broken the uptrend. I thought this might go up a little higher to the 50 MA. It still might, but it's used up a lot of its mojo. You can see we've had these protracted declines before in Exxon. Everyone seems to wonder and think something crazy is going on. I don't really think so. It's sort of been holding the lower end of the range here. The 50% fib of the entire move it's been holding. If we were to lose this 50%, maybe we might get down to the 61.8, but I'd be interested in selling some out of the money puts there. I started down here, and I would be looking to add here because I started out small, and I'm looking to kind of build it into a bigger position. So that's my thinking. Got to pick up the pace here a little bit, right? We're going a little slow. China. Let's keep it simple, stupid with China. We got up to the old highs. There's a back off. It broke trend. If we were to get down somewhere in this 200 MA area, 36s, I'd probably start getting interested in maybe selling some out of the money puts short term. You could use this 2-day range though. Above the 2-day range, you could play long for a bounce. Below the 2-day low, I guess you could play immediately short. The BIDU. I've been paying close attention to this because I had talked about this being in a triangle, and we're holding the 200 MA here. If you lose 171.73, I like it as a right or right out short down to like 65s. The wedge here is kind of narrowing, so I think we kind of have to wait for it to break definitively for a real play. If this were to break to the downside, we could tumble all the way down to 130s. If we were to take out this high though, the 188.54, I think that this could want to see the old all-time high. So short term here, if you're bullish and you're long, you could use that 71.73 as a stop, and anything below there is a GTFO or a right or right out short. BABA, not much to say. It's still kind of consolidating in the range. Below 99.94 would be a short, and I guess above 105.20 I guess is a right or right out long. It seems to me that this is consolidating and going to have a break at some point one way or another. There was a break down to the 50 MA, a 50, 100 MA confluence. Look how much resistance the 100 MA was. That would probably be a cover point and maybe a spot to reverse and go long or sell some out of the money puts into. The IBB. This seems to be looking like it's trying to improve. This had a triangle that resolved up. We filled it. We're at the high. There's a little bit more room here to the upside with regard to the channel high, but probably a good idea to start booking some profits soon. I had drawn this as sort of like an outside potential of 315, so I do think that there may be a little bit more up room, but I'd be more of a BTD guy than a chase guy at this point. Gilead, I've been long this for a little while. Actually, as soon as we got over these highs, I got long. I booked some profits here, kept some of it. I kept the short puts. I covered some of the call spreads. I mean, I sold them, and I kept on all the short puts, and I still have some call spreads. So I'm looking for the full gap fill, and then I'll pretty much bail. That's just my trade. Mylan. Wow. We had talked about this being a rounded bottom, and it was. I'll keep it simple, stupid. The earnings gap day range. Below 44.10 is a short for a gap fill, and maybe then some. And above 45.87 is a long, and I think that that could continue the move higher. Financials. These things have run, and they all basically look the same. It's sort of 6 of one, half a dozen of the other. This day's range to me is very key because it kind of looked above and failed and came below. You have a bit of a consolidation day, so above 25.30 is a long, below 24.84 is a right or right out short for a move pull back maybe to the 50 MA, and this will remain longs on 50 MA tests until it is not. The JP Morgan. This is at above this channel high and at this channel high. Same pattern. We doubled the range. 93.32. We actually got a little bit above there, so I like the idea of booking some profit short term. I'd be a buyer on a pullback to, you guessed it, the 50 MA. I do think at some point this stock will see a hundo par for the initiated. Bank America, a mini secure high, almost 2 times the range. Below the 3-day low, I like short. Above 25.80, it will continue higher. Very simple trade. Ameritrade. Now, I was bullish on this. My call was to 47s. We got there, and I said to book it. This was the day that E-Trade cut their fees. And that turned for me. This was a big move. It rallied. It did wind up rallying, and I put on a put spread. And we got follow through once, I don't know, Fidelity or one of them cut their fees also. The next day was a big move up. This took back a lot of the profits that I had in the short, which I wasn't so thrilled about. But the next couple days were rather weak. We are right on trend. We were right basically at the breakout. I'll keep it simple. Friday after the bell, leave it to a trading firm to put news out on a Friday. Yeah, that they cut their fees also. So if they can't go down on that news, which has been widely anticipated would come, the stock will be a long, and it will fill gaps and probably get back to the 50 MA. If the stock does go down and gap down, I'm looking to book it somewhere around this area, which was the breakout. 36.89-ish area. Yeah, if there's a gap down or something in here, I will be looking to probably close it. If you have the inclination, I don't know. The 200 MA here is right here, and I guess there's the gap fill. I guess you could try to hold it to 34.47, but this for me is the spot. 50% fib. Alrighty, moving right along. SPY, the expected move this week is $2.13. That would be up to 240.55 or down to 236.29. We do know that the IV would pick up significantly if the move is down. This was this big gap up day, and we've just kind of been plodding along to kind of fill the gap. We're way above the channel. There's a new channel kind of in town. My call, if there is a pullback, it would probably be first to the gap fill. If it keeps going to the back side of the old channel where there's another gap fill. So somewhere into this like 234 area to me would be a downside potential. If this were to really pick up, you have a 10-day here. If you lose the 10-day, I think we would get the 20 MA, which is roughly around there. And you can see the 20 MA has kind of been holding for a while. It would probably hold again. At some point, I don't know when, I keep saying this, but I think we will see a 50 MA retest. I don't know when. This day was a kind of poor high, and that's why we had this break. I know a lot of people thought this was because of the Jeff Sessions. I know the media would like to make that the story, but it was really just a move off from the poor high and a back off. That's really it. Above Friday's high, I think there would be a continued bounce higher. Below the low fills the gap. That's just my opinion. One man's opinion. IWM, $2.17. Up to 140.82 or down to 136.48. Again, I use the up move as sort of the bound, because the down move could be more, of course. This has just been kind of playing around. I left in this fib, this starting point. I didn't raise it, but you can just see we've been trading on either side of it. So I'll keep it simple. Friday's range is a doji. Above the high, long, below the low, short for a move down to the 50, maybe even the channel low to 135. Wouldn't be the end of the world. This would basically just be a look above and fail of range, and coming back to at least the midpoint of the range is quite normal. Qs, $1.17, 132.19 or 129.85, same caveat. This is getting close to the 1.618, bigger, longer term 618 fib. You do see the money flow after getting overbought kind of pulling in. Price hasn't done all that much, but we have filled the gap here, which has me thinking SPY may do the same. The backside of this channel would be the first point. Maybe at some point we would get a 50 MA retest on a larger pullback and a channel low. I don't know how easy that's going to be given the move in some of these tech stocks, but we're going to get into that for a moment. Right now we're holding this very extreme trend. If you lose Friday's low, I think you could try a right or right out short entry for a move at least to the 20 MA. Above those 3-day highs here, I do think we will continue the beast move higher. Apple is this was a big up day. You had kind of a you have like these consolidations. If you lose this day's low, which was 137.60, I think that would begin a pullback to maybe at some point the backside of the old up channel. We've more than exceeded the 2 times range, so we can just delete that at this point. As long as the 10-day holds, which you can see it's been riding, it's okay. If you lose the 10-day, I think at the very least you'd get the 20. And at some point, maybe down here. So I would be interested in either could buy stop it over 140.28, or you could put a sell stop in below 137.60 for a move lower. Microsoft. This is going to be interesting for a few reasons. One, the 50 MA is where we broke out from and has held for a while, and this time was no different. If you lose the 50, I think it's short for a move down to at least 62.75. And if you lose that, I think down to the backside of the old up channel line. There are 2 up channels, the big one and then like a smaller one and the 100 MA. So if you were to lose this, like, check this out. This will bake your noodle. That to me would be a confirmed move that the top might be in, right? For at least for Microsoft. And if we were to lose this low, you'd be coming from lower highs, right? Like, this was a big up day that kind of broke the uptrend and now is down. This was like a look above and fail. We're still in that range here. Like, here you kind of closed just below it, and here was like a look below and fail, held to 50. So I like the idea of putting a short in below 30, 63, 62. If you were to get back above this high, 60, basically 65, I wouldn't. I mean, I wouldn't want to be short. I don't know if I want to still be long, but I definitely wouldn't want to be short. Amazon is just chilling, right? Chillaxing. It came up from the bottom, broke out, and now kind of just whatever. The chillax is in full effect. I'm hoping for a summer correction that would get this thing to come down to buy. But let's put it like this. You came up from the bottom, spent a lot of time below here, and now broke out. This consolidation range to me is important. You had to look below and fail, and it came up. If you lose this 837.75 and the 20 MA, I think this will come down in a hurry to the 50 MA. If you break this, these couple of, like, this was a kind of dragonfly doji, and this was basically a double top. If you can get above that 854.83, it's a long probably to retest the old high and most likely to make new all-time highs. Facebook, the curious case of Facebook. Came up from the bottom, marked some time. This is a big day and just beasting, right? I mean, I shouldn't say beasting, but riding the backside of the old uptrend. At some point, this is going to have a pullback, but as long as it holds above 133.5 and this day's low, which is 133.46, the path of least resistance, in my view, is either sideways to higher. If you lose that low of day, 133.46, it is a short. Simple, stupid. Snapchat. So this came public. Pretty bullish, right? I did a poll. Everyone was bearish. Naturally, the stock went higher. Tuesday, it will be potentially you can short. So my view is this. As long as you're above this 26.05, the risk is long. Now, you know how I talk about an opening day's range. And usually there's a pullback, and then once you clear that opening day's high, it's a long, and then you double the range. So, like, let's say this opened up here. The open here was 24. It got 26.05, and the low of day was 23.50. So let's say this, like, pulled back to $20 or whatever. So you'd have basically a $6 range, and the minute you cross this 26, you could expect it to go another $6 up to 32. So I'm willing to stipulate that we can count this as one day and the range, assuming we don't take this out on Monday. But, like, let's say this pulls back, you have wherever this pullback is. Let's say it gets below this IPO range or whatever, what have you. Even if it just stays in here, you could combine those and then double it to the top once this gets crossed. Like, I'm kind of going to just say that this is one day, almost. I'll talk about it when the trade does set up, but that is how I tend to trade these IPOs. I wait for the opening range to establish, I wait for the pullback, and then once that opening range is cleared, you basically just double up the range, and it usually just works. Google is nowhere near the channel high. I think this is looking like it's trying to improve. You have, like, I don't know, I don't want to say that this is a lower high. It's just like you had a lot of consolidation at this breakout, and it just kind of stutter-stepped back. You have a doji here. I think if you wait above 858, it'll probably see the old all-time high and then more. Or if this pulls back, I think the 50 MA would probably be a target. Like, if you were to lose this low, this 841.44, you have all these hammers here. the stock, I think, would not be happy and would go a lot lower. So that's what I'm thinking with regard to Google. Netflix is in pullback mode, although, believe it or not, it still has not lost the range, and the range low is the 50 MA. So 50 MA is right or right out. If that's lost, you could reverse and play for the gap fill and maybe a trend play, where, again, I'd be looking to probably reverse and go long. Tesla. 50 MA. Kind of caught it. It stopped a little short of there, 240.85, and this was the breakout of the trend. It stayed and went up, and now is looked below and fell. So I'd really like to get this thing long around the 200 MA. Like if this were to collapse here, once it's at the 200 MA, that was the trouble to break out from, and it should be the support again, and the fact that it coincides basically with a 61.8 is interesting to me. But if you're already in this, or you're looking, you can't, if you have ants in your pants, fine. 50 MA look was a lot of resistance also, so as long as the 50 holds, it's a long. If you break below it, you could try right or right out short and kind of keep it simple stupid like that. NVDA. So this was in a range for a while. This was a look below and fail, and now we're back below it. This is basically a double bottom, and you have 100 MA right here. If you're looking to short below 95.70, is a short, and I think that would pull back to 85, 86. If you're looking for a quick long and you want to try right or right out, you can try above 98.77. which is Friday's high, for a move up, maybe to the 50 MA, at least to the downtrend line, which would be like 101s, 102s. TASR. A stock I had been bullish on, but have been souring on a little bit. They had come out a while back, and they had said that they were, I think it was here, that one of their competitors is starting to... they have competition. They're starting to get some competition. I still think that they're the best in the business, but their margins are compressing, and the stock is in a downtrend. There was a bit of a wedge here that broke. I was actually short puts here that I wound up taking off for a nice profit, and I'm glad I did because it came down. This area to me, this like 21.39 is a neckline. It's also a reference low. You broke a trend. This should somewhere between here and the 19s, I think it is an important level. I'll be looking to sell some near dated, I have to see what the juice is like out of the money puts, or maybe longer dated around the 17s. I think that area should probably hold it. I have to revisit that, but TASR is, I'm souring on it a little bit. SHAK, this thing got, I had been actually some shorts and puts, and I closed them for a pretty decent profit. I forget which day. I feel like it was either one of these 2 days at some point, maybe this one. And now we're coming down. We filled the gap, and I think a lot of people are really bearish because they see that we broke this these lows, and the gap filled. But I don't think that they are looking at what I'm looking at, and that is, ladies and gentlemen, a channel. So once we got the gap fill, we have a channel low around 32s. That is a very important area. You can see where this took off from was 31.90, basically here. So what I'm looking to do is to sell out of the money puts below 30.90, which was this reference low. Basically we'd be coming down from the top, and even if we were to undercut this, I don't think it would stick all that long. I think there would be a throwback up. So somewhere on Monday or Tuesday, if this is down, I'll be looking to sell out of the money puts again in SHAK. Under Armour, it's just been a very, very frustrating piece of junk. We did get the channel low bounce, but it wasn't very much. You had a bit of a look into the gap and fail, so we're now coming down to the bottom of the range. This could just chop for a while. I'll tell you, I've had some call spreads on. I've had some short puts. I have actually long call spreads and long and short puts on. Now, I saw this day here was an undercut and fail, so I had resold puts on the clearing of that day's kind of high, and it closed all right, and then Friday was kind of junky again, so I think I might just use 2030 as the stop on the entire position. I would probably double it up if we could clear the 10-day MA, because look, this is where we broke down from. It's been supporting, we're below it, and you have a 20 and a 10-day. So if we could clear that, I might even double up the position. Actually, I'm sorry. If we clear 2153, that was this breakdown bar, I'll double the position up. If we get below this, I'll probably just stop it out, or at least stop out half of it. It's just not worth my time. Boeing. So anyone who follows me for a while knows that I don't like to pick tops in stocks. But, yes, that is exactly what I'm trying to do now. Why? We're above the channel high. This thing is basically above the measured move high. And we're showing some signs of fatigue in the move. Look at this, is like buried and overbought. It's starting to turn. And look at this. You had an inverse doji day, a move up with a hammer, a higher high, and then we got below this low. So what I did was I put on a put spread and a short call. I think I'm short next week's 85s, and I'm long 2 weeks worth of, what is it, 75.70, I want to say, or 80.75 maybe. I have to check put spreads. It didn't cost me very much. I think it was like 25 cents. So I noticed this was also down another $1 in after hours on Friday, which was nice. Look, the 20 MA was a lot of support. I'm basically just playing for a move down to the 20 MA, and I'll be out of it at that point. If this were to get above Friday's high, 83.58, and sustain in above it, like it, not just like it opens here and then sells off all day. If we get above there, I'll probably just stop it out and then wait for another type of setup. So that's the story. Anyhow, that's my story. I'm sticking to it. If you like this video, hit the thumbs up. If you're not following me on Twitter, my handle is @JustinPulitzer, and be sure to subscribe and hit the little notification bar. There's like a little bell with a plus in it, and you'll get notifications whenever I post new videos to YouTube. Anyway, have a great rest of your weekend, and cheers.